Good morning. So again, we are on the oil chart this morning. The bulls are in control, and they're really pressing hard this morning. And I'm going to show you that. Um, we're on the daily. This is the daily chart, daily 1 year chart. Okay, so we start with that outlook first. Um, and as you can see, we've been making higher highs. That gives us our sentiment. Market has been making higher highs since January. Been little periods of sideways action. That's what you see here, these blank spaces. Basically, that's sideways action where the price really wasn't being aggressive, just kind of moving in a consolidation pattern. All right, then you see a period of higher highs, and now we're anticipating, after we've been in a channel, we've been moving sideways for a few days. We're anticipating that next higher high. All right, that's one of the biggest things we take away from the daily chart. The other big thing is, I got some other things going on. Don't pay attention down here yet. The other big thing is the ATR. The ATR tells you the energy of the market, the energy. And the ATR right now is 1.15 on the lower end of volatility for oil. All right, so two big things. Market is making higher highs, so we've been anticipating higher highs. We're anticipating more higher highs. Number two, market is vibrating at about $1.15 up and down. So that gives us our outlook. Now we want to zero in and find out where is support. We know we're in an uptrend, and we need to find where is support. So what we do is we go down to the 12-hour chart. This is one of the big things that I do. I go down to the 12-hour chart, and that's the 4-hour chart. But let me show you the 12-hour chart. And I just outline where the ATR is. The ATR Trail stop is really accurate in terms of following the activity of the market, following the wave, that fluctuation. And remember, there's lots of supports, but the ATR Trail stop just kind of gives us a confirmation, more so than a real trailing stop. It gives us a confirmation that market is moving up and price is above the ATR, So next stage is, we're finding out where the possible entry could have been. And as you see here, we talked about in the last video where, the supply and demand levels, right? And you can see, let me just go to the 4-hour and zero in a little more. And you can see right here, like how the price respected this level here several times, 1, 2, 3, and 4. And then we went back to this demand level. See how the price touched demand 2 times. And then the third time is where we are right now. So we're in this, we're basically, once the price gets back to demand, that's when we really start getting interested in moving with the current of the market. Like this is a river of energy, and you're just jumping in the river when the time is right. This is a good shot too because you can see the 50 period moving average is above the 200 period moving average. So you're in a strong uptrend. And every time it comes back in, it bounces off that accesses as a kind of a dynamic support level. Let's go into the 2-hour time frame. All right, and now we can really, you're really zeroing in on key things: measurement, more so measurement and time and breakout. Okay, and I'm also looking at the stochastic and CCI. So this is where I start also looking at how far away. See, yesterday we came from this low a couple days ago, and that low is 164, and it took 22 hours to do that. Okay, 164 and 2 hours to do that. Then we moved to this high, which is in the supply zone, and all day was it was a down move all day, and we moved to this low right here, and that took one day, 24 hours, and it moved 1.2. And remember, the average true range is 1.1, so we moved 1.2, and it took one day to do that. Time is important too, because these waves typically, they have not only is there a distance thing to these waves, but it's a time thing, like from here to here, from this low to this high, took 22 hours, So it's a rhythm to the market that a lot of people don't appreciate. 22 hours. And the distance was 1.6, I believe. Let's see, 1.6. 1.6, right? So 1.6. And you'll see this repeatedly. It's just, waves. And not only does that wave have an amplitude, they have a duration to them. So when you see, oh, okay, well, from this previous high, this is yesterday, we moved from the supply zone, and over the course of a day, we moved $1.02. That's about right. So not only do you look at distance, you look at how long is it taking, so you can anticipate, when you start getting back into the demand zone, you're looking at distance and time. Okay, time is important. There's some key time things we're going to talk about too. But you can see that you're in the AVZ zone. 50 period is above the 200 period. You're at a significant level, intraday level. This is the previous high of day. Sometimes traders just have their orders sitting right at these levels. Okay. And so yesterday I went long here. And my risk was down here about $1.21 away. So right here, I'm okay risking 1.26. Why are you okay with that? Well, the main reason why I'm okay with that is a couple reasons I'm okay with that risk. I'm going long here. One, I've moved one whole average true range from the supply zone. Number two, you're in a demand zone, so that's been tested and respected multiple times. See, 1, 2, and then you're coming back in for a third haul. Number 3, this is a pretty significant move. It took a day. You move 1.2. Number 3, I'm in the AVZ zone, which is between the 50 and the 200. I'm in that zone. All right. And so, and the last reason is I can get the stop below the third support level. Rarely, when you're in an uptrend, if you were to look back over the last 20 days, price is not touching that S3 level. Okay, it might touch a R1 or R2, but not a S3, right? You see that? All right, it comes down and dips, but it doesn't get to that R3. Why is that? Because these pivot points, and we had to get more in depth on that, but the pivot points are a measure of volatility, intraday volatility. So when volatility contracts, they shrink. When volatility expands, they get bigger. So a very powerful tool to kind of assess where the market will go or where it will not go. So how did I get into this move? Well, what we're going to do now is just go down to the 1 minute. All right. And I'll pull over. First, I'm going to show you what happened yesterday. So this is supply. And you can see when we hit the supply zone, we got under the 200 period moving average. Price went under the 200 period moving average. And 200 was acting as a resistance all the way down until you hit demand. Okay? When you hit the demand zone and you've moved that $2,
it's 8:30.
You're expecting a reversal, right? And there it is right there. So right here, you should be expecting that reversal to happen. Right here, you see how the 50 crosses over the 200. So you hit the demand zone. You don't just automatically buy. You want to see resistance becoming support, right? So this 200 was resistance, and right here it's becoming support, and it's being respected as support. So you could have been in here. That would have been a great entry. Okay, and now you can see the market's been retesting that, and now we're above the pivot point, and we got 36 ticks up so far. Now, next question is, how do you know when to get out? Well, it goes back to the volatility. The volatility is 1.2 per day. Okay, and we've so far from this low, see, this line is telling you this is the lower day, right? So from that low, we've already moved 66 ticks. So I'm anticipating another 40 ticks, and look at where my stop is. See, I'm out at right here, $1. So I'm anticipating the market's going to move at least $1, because that is the average true range. That's the vibration. So I got in here, and I'm trying to get out right there. All right. I hope that was helpful, and we will talk soon.